right, how's it going, everyone? We are here doing a Q&A sort of video and maybe a podcast as well, but my lovely fiance here, Samantha, she is a big investor, So, laughing because she really couldn't care less about investing, but she supports me, so she's going to be asking me questions, and she wrote in to some of her friends, and they have some questions. So we're just going to be going through kind of a beginner 101, what about stocks, what about investing, and so we're going to just hop right in.
All right, first question. What is the stock market?
What is the stock market? We're starting right down here, which is good. The stock market is just a collection of publicly traded businesses. So there's privately held businesses, which, if you go down to your local restaurant or there's somebody just selling pizza at a pizza shop, that's very likely a privately held business. And when those companies get bigger and bigger and bigger, and they finally need a lot of capital to grow, they go public in a process called an initial public offering. And so those companies go from being privately held to now being publicly held, where everybody can buy shares in those companies as investors. And so a collection of all these publicly traded companies is known as the stock market. And so a stock is essentially just an ownership in a business, and you're just trading those or buying and selling those shares on an openly traded market.
So basically one business, so Apple, for example, there are essentially thousands and millions of people that own Apple because they all own a share or multiple shares in the business.
Yeah, exactly.
Okay. We kind of talked about a stock versus a share, and if they're the same thing, where there's different amounts of shares in the company, and a stock is you buy a stock, which is essentially the same thing as a share, right?
Yeah, you buy shares in a stock.
So, okay, buy shares in a stock. And are there a gazillion stocks in one company, or is one company the stock?
One company is the stock.
And you buy shares in that.
Right.
Got it. Okay. So it's like a giant Lego building, and taking a Lego is a share.
Yeah, exactly.
And the Lego building is the stock. Got it. And then how does the stock market go up and down? Where people say, oh, the stock market's down today, or even the Dow dropped 100 points. Are points, a few questions. Are points the same things as just the stock market being down? Is that shares being bought? Yeah. What is all that?
Okay, just the mechanics of how it actually works. So, yeah, when you see, Dow Jones dropped 1,000 points on coronavirus fears. So there's a few things here. So one, Dow Jones is considered an index. So there's a company who created this index, and they essentially so the Dow Jones, it's a collection of 30 stocks that is broadly known as like the market. So when you see Dow drops 1,000 points, that means, so I think the Dow as of latest count is something like 23,000. So that is
23,000 points.
23,000 points, exactly. So if it's down 1,000, that means roughly it's down about 4%. So the newspapers will say down 1,000 points because it sounds way more grandiose. But if you look at the percentages, it's about 4%. So, that is a big downward move if it's down 1,000 points. But I think it's a better idea to always put it in terms of percentages rather than points, because the stock market slowly climbs over time just because entrepreneurs are trying to basically people are self-interested and people want to make things better, and ingenuity is essentially what props the market up over time. And so in 10 years, it's not unlikely that, the Dow will be at 50,000. And so then 1,000 point drop will really be a 2% drop. And so it's always better to put it in percentages. But actually how the mechanics of a stock going up and down work is it's just supply and demand. So there's something called a bid ask. So when you're trading a stock, you'll see that the bid for the stock, let's say the stock is trading at $100 per share and the bid is $100. And so you're gonna ask, well, you obviously want a lower price than that, you want a better deal. And this happens at like a very micro level, so you don't really even need to know the mechanics of it, but essentially if there's more demand than there are people buying, then there are people selling the shares, that means those people selling the shares can ask for a higher price. And so if there's more demand than supply, that means the stock goes up and up until somebody is a willing seller. So let's say it's $100 a share and you own that share, but you're like, no, I think this is really worth $120 a share. The stock would keep going up until you sell if you're the only one in the market. And so it would happen the opposite way. If there's a lot of people that want to sell and not a lot of people that want to buy, now the buyers have leverage. And so the stock goes down until the bid ask is essentially met.
Where does that happen? Like, where are these people discussing and how is that even happening?
Yeah, so, I mean, in the old days, you'd see the classic sort of people on Wall Street running around and holding the papers, and they would they would be doing that in real time. And now it's all done by computers, and so you don't really see any of that happening, but it's all based on the buy and sell orders that are happening within your brokerage. So a brokerage is where, like, the digital, now it's all digital, so it's an app, it's a website. I mean, the big brokerages are like Schwab, Fidelity, E-Trade, Robinhood. There's a bunch of different brokerages now, and all you have to do is log on to the website, fill out an application. You'll have to put in your social security because it's all regulated, and then you can just fund it with your bank account, and then you can buy stocks within that brokerage. But all of that is happening just via computer.
Okay, and are there still representatives that are doing or is it totally automated based deciding the price of the stock? Is it entirely automated, or are there still representatives doing it via technology?
It's actually a really nuanced question, because in big blocks of shares, like if a mutual fund, which we can get into that, what that is, a mutual fund owner, which is essentially a collection of different stocks where they will buy big blocks of shares, then there might be a trader in the middle of that just making sure the transaction goes smoothly. But for most transactions that go on today, it's all just done algorithmically. So it's pretty much you don't even see what's going on.
Okay. So then when they say that the Dow has dropped 1,000 points, does that mean it has dropped 1,000 shares? Like 1,000 shares have been sold, or the value in it has gone down 1,000? What does that mean? It's dropped 1,000 points.
So with the points and the percentages, right? Remember I was saying that 1,000 points is really like 4% of the Dow? That just means that the collection of those 30 stocks has fallen on average in price by 4%.
Okay.
So something happened where, it's a good example right now. The coronavirus is going on. I mean, the Dow dropped from the peak to the trough of something like 35% over a couple of weeks. And so that just meant the value of those stocks declined on average 35%. And that could be however many points mathematically that is.
Okay. And that's just because either more people are trying to sell than they are buying.
Exactly.
Got it. You mentioned this, you touched on this, but just I want to be extra clear for my friends that ask this. Where do you even start investing? Is it an app? Is it a website? But you mentioned the brokerage. Just can you be extra clear on that, just so we can highlight that answer?
Sure. So you could type in on Google E-Trade, click the first link, and then it'll say open account, and you'll click open account, and then it will say your name, email address, social security number, and then you put in an application. Probably a day goes by, you'll get an email saying, okay, you've been approved. Then you go in there and you can set up your bank account with your routing and account number, and then you'll be able to fund that with an amount of money. And then once you fund that, there'll be a button at the top that says buy or sell, and you can press buy, and then you can type in the ticker. So a ticker is the 1 through 4 letter usually symbol that represents a stock. So the ticker of Amazon is AMZN, the ticker for Macy's is M, just kind of the symbol, the stock symbol, that's also known as a ticker. And so you'd type in the ticker AMZN, and then it would pop up how many shares do you want to buy, and then based on how much money you have, you can buy that many shares, and then you just press execute, and now you're the proud owner of a share of stock.
Okay. And then do you have a preferred brokerage? What brokerage?
Brokerage.
That's all. It's not brokerage account, brokerage company, just brokerage.
Yeah, just brokerage.
Do you have a preferred brokerage?
So when I first started investing, I used Robinhood because it was kind of the early days of zero commission trading. And so back in the day, brokers, people like the classic Wolf of Wall Street stockbrokers, people that get on the phone and trying to say, hey, do you want to buy these shares? They would charge you like $200 per trade. And so you'd have to have a lot of money for that to be worth it. But now with the internet, a lot of the costs are coming down, and Robinhood was really one of the first companies to revolutionize zero commission trading. So you could trade a stock for free. There was no fee for it. And now a lot of the bigger brokerages have followed suit because Robinhood has really caught on. And so just probably 6 to 8 months ago, a lot of the big brokerages all went free. So E-Trade is a great one. That's what I use personally now. Fidelity is also great. So there's a lot of good ones out there now.
Okay, that's good to know.
If you're new to investing and want to learn more, please stay tuned and watch all the videos in this series. Thank you so much for watching this video. If you enjoyed it, please like and subscribe to our channel, and please leave a comment below for any other questions you have. All right, on to the next video.